Good morning, traders. Aaron here with a quick technical update on the euro pound ahead of the July UK CPI inflation data on Wednesday this week. Now, service sector inflation will be important in this report, which has been sticky. We will need to see something here to, shall we say, move the BOE's dial. Year-over-year services inflation is expected to have ticked higher to 4.8%, up from 4.7% in June. The estimate range, however, spans between a high of 5% and a low of 4.7%. So anything at or preferably below the lowest estimate will get attention and possibly nudge the pound lower. As for the year-over-year CPI headline print, the median estimate suggests that inflation has increased by 3.7%, up from 3.6%, while year-over-year core inflation is expected to have remained unchanged at 3.7%. Should we see broad softening across the board here in terms of the UK CPI inflation data, this will move investors to I believe it will move investors to fully price in another rate cut this year, of course, weighing on the pound and gilts. Currently, we are looking at markets pricing in about 15 basis points for the year end. So really no rate cuts as of writing. Now, in terms of where we are on the euro pound ahead of that all-important report, as you can see on the monthly time frame here, the chart on the left, we have had price rebound from the support area at 82.29, between 82.29 and 83.15. This has resulted in a break of a trend line support taken from that high of 95.04. Now, for me personally, this potentially clears the pathway north to this resistance, this monthly resistance at 88.69 here. So longer term or medium term, we are looking at higher prices according to the monthly chart. Now, if we spin across to the daily chart here, we have recently completed a harmonic AB equals CD pattern, which can be depicted by the 100% projection ratio at 86.03 here, which is complemented by this support at 86.08. As you can see, we did form a textbook bullish engulfing candle on Friday, which, as I'm sure you're aware, a textbook bullish engulfing candle focuses on the open and close rather than the extremes, the higher and lower wicks. So as you can see, we have that bullish engulfing candle, and look, we're pretty much unchanged on the day in early London this morning, but the upside targets for anyone that is long that AB equals CD support pattern is generally focused on the 38.2% and the 61.8% Fibonacci projection ratios here. This is taken from legs A to D. Let me see if I can show you this. From legs A to D, there we go. So we draw that from legs A to D, and these are considered common upside objectives for technical traders that execute long positions from AB equals CD supports. So look, if we get above here, look, the main point here is we have upside scope on the monthly time frame, and we have upside scope on the daily time frame. So for me, there is room for further outperformance on the euro pound, at least until 86.57, with a break of that level targeting 86.93. So roughly the 0.87 handle. That's it from me today. Thank you very much for joining. Have a great week ahead.